Today I want to talk about Trading Pad. You'll find that section on the website under Trading Pad. You can read more about it if you'd like, but I'd like to talk to you about the best way we feel to take notes. What I want you to use to follow along is just a simple E-mini chart set to a 5-minute interval, as you can see in the top left corner here. A simple 5-minute chart with no indicators of any kind. We're going to be giving you the levels that the market will use ahead of time. I want you to record them, and then we're going to show you how to transpose them onto your chart for the best use. Let me just scroll to a different page here, or a different part of my screen. And if you read that section entitled Trading Pad, you'll see that we advocate using a full-size pad of paper in order to take notes. I like the ones that are spiral bound across the top. Doesn't have to be. You can use the ones that are spiral bound down the side. But I like it so that we can flip back to previous sessions to look at notes taken. I always like to record the date, just the month and the day, in the top corner here so that I always know what day I'm talking about should I want to refer back from sessions in the future back to this day. Whenever we talk about the market, we always need to be aware of where we are trading at the given time. It's always important to be aware of where we're trading at the moment, because any post that I give is going to be relative to where we're trading at the time. For example, I will never post a buy above where it's trading now, and I will never post a sale below where it's trading now. Why wouldn't you just do it now? So if I post a level that's higher than where it's trading now, that level is either going to be a bounce target or a place for selling. And if it's below where I'm trading now, then it's either going to be a pullback target or a place to buy, depending upon the other posts, which we'll get to in a moment. To that end, we want to start recording levels that we can use as the day progresses. We keep track of them in this first column here on our pad, on our trading pad, which is a full-size pad of paper. Yes, I know that may seem archaic. Yes, I know that a lot of you high-tech people and computer users want to or think you can keep track of these levels or these posts in your computer. That won't work. I'm not trying to educate your computer. I'm not trying to teach your computer how to trade. I'm trying to teach you and your brain. So it may seem a bit Stone Age. Yes, I know, it's Abe Lincoln writing on the back of a shovel with a piece of coal. But the best way to learn anything is to read it and then write it down by hand with a pen in your own handwriting. That will make it sink into your brain. So even though we spend our day working on computers, I still believe the best way to learn this is to do it by hand with a pen on a piece of paper, or in this case a pad of paper. So I want you to use this first column here to keep track of all the price levels that we post. Observe where it is when you first come in the room, more or less. You don't have to write down where it is, but just observe where it is. Any level that I give you that's higher than that, I would post higher in a price ladder fashion. If it's higher still, I would write that next level up here. If there's quite a distance between levels, and let's say I give you one that's quite a bit higher, then I would leave a bit of a space here. If I give you one that's, say, not much higher than that one, then you might write it close to it. If I give you levels that are lower than where it's trading now, I'd put it below that. If I give you a lower level still, I would put it below that. If I give you a lower level still, I would put it below that. Now you've got the levels that the market will use in a quick reference kind of guide for the day. What happens in between here? Nothing. We're going to use these levels, and I'll show you the best way in a moment how we're going to do that. this next section right here, I would use to record the story. And what do I mean by the story? Let's say, for example, that we said we can use this level as some support. And this is where we're trading when we start posting. Use this level as some support. We're going to bounce up to here. Let's call this level A. We'll pull back to this level B. And we'll bounce to this target here. Let's call that target C. And perhaps later, target D. Well, that's the story. Now, I've given you these levels ahead of time, which you'll have recorded in this first column. But the story will be recorded here. Now, you can draw a picture of what it's supposed to look like. We'll bounce to here. We'll pull back to here. We'll bounce to here. And then maybe to there. You can do it one step at a time. It doesn't really matter. You can draw a line under it as we complete each phase. But then what you should be seeing is the market will pull back to here and then bounce to here. And then after it does, we'll be taking profit at this level C. You can read about entries and exit sections, and we'll do a video on those as well. And then during that time, I'll give you a pullback target to use in order to get to D. So the first column is for recording the levels themselves. The middle column would be for recording the story on a play-by-play scenario. I may give you this level has to hold, and then you could write that. Let's say you recorded that here. This level has to hold. You can make your own notes in your own handwriting. You can come up with your own shorthand. It doesn't really matter as long as you're recording what we post, because that's what's going to be important. Finally, and when you get to this stage, and nobody right out of the gate should be at this stage, in order to trade well and use the information that we would be teaching you and showing you, you need to understand it. And before you understand it, you need to see it. So it's important that we not get ahead of ourselves. I know traders are, for the most part, impatient and excitable. We don't want to diminish anyone's enthusiasm. However, we have to learn this, and you learn it by repetition, by growing, by absorption. Slow and steady is the best way. But eventually what we'll be using this third column for is for recording our actions. We would be selling it, say, a couple ticks in front of that. We'd catch this ride down. We'd take profit from that sale and reverse the buy side there. Say a couple ticks from this risk parameter has to hold. We'd ride buy side up here. We'd be taking profit, couple ticks in front of that. If there's enough room to scalp sell side, we could scalp sell side, couple ticks in front of that. We'd take profit from the scalp sell and reverse the buy side, couple ticks in front of this target, and then take profit, couple ticks in front of that. That's where you would record those actions here in that third column. You would be saying what your actions would be on a play-by-play basis, and that's how you'll figure out if you understand it. If you're doing the wrong things, or if it doesn't make sense, whatever, it'll come out here, and we've got question and answer sessions. We call them weekly voice chats, where we answer those questions. So let's not get ahead of ourselves. First, let's start recording the levels, and then recording the story here in this middle section. Once we've got the levels recorded that we post during the morning session, right out of the gate at 8 o'clock, those levels are valid. They would be usable if you were trading them. Of course, you're not in the free trial room. But I want you to take those levels and make, on your software, in your charting software, big, long, horizontal lines. You can make them any color you like. You can make them different thicknesses, whatever makes sense to your brain. I'm not trying to tell you what to do. I'm trying to show you the best way to do this. So you can clone these lines, make them different colors. You can make ones for the bottom green. You can make the ones for the top red. Most retail traders like to do that backwards. You can make certain interim levels black. You can make certain levels blue. It doesn't really matter. I like to stay away from too much green and red because it gets confusing on the chart. And then what you would do is bring them into your chart. Of course, I'm using this as a whiteboard. And today we had 41.50 as some support that we were buying up against. And we said 15.51 was breakout, and of course it didn't trade higher than that, so it was perfect. We were selling up against that. We used 15.46 quarter, a great deal, etc. So your chart will be blank when your day starts, and what I want you to do is extend those into what will become your chart, so that you'll see how the market behaves relative to those levels. For example, today we used 14, I'm sorry, I keep saying 14. For example, today we used 15.51 as a breakout level, meaning it had to trade higher than that to breakout. And because it didn't, we were selling up against that, a couple ticks in front of that, for a move back down to 15.44, 15.43.50, which is right here, more or less. So if we are selling up against that, we've got small risk. Our posts are going to be more like connect the dots, except our dots aren't round. They're going to be square areas of a point or so, point and a half kind of areas, where we started the day buying 47.75 area, which is right here, this particular day. So our buying area was right here. You could check that box off, bought it. Came up to 51, we took profit, reversed the sell side, check. We came down here, we took some profit at 46 quarter area. Check. Aggressive can hold some for a move down to 43.5. Did that, and so forth. This will take some time to understand. This will take a few voice chat sessions for me to map out a current day when you've been in the room all day, and I can replay it so I can show you relative to what's been posted, the levels that we gave, and how the market behaved according to those levels. And you can see over time it will make more sense the longer you're here. Most traders, especially retail traders, have a tendency to panic and chase afterwards. They're using indicators. All indicators lag, and therefore they're always chasing the market. We're trying to show you a completely different way, the way pro traders approach the market, the way pro traders think, having those turns ahead of time. We like to use a football analogy here. This is like having the rule book and having the playbook. We can tell you ahead of time what the rules are and what the plays should look like. However, we don't run the players. The people that are trading the market are like the players. We don't run the market, we don't run the players, but we tell you what should be happening and what's going to change our mind, and we tell you that ahead of time. Please watch the sections on entries and exits and stops, and we'll help clarify those areas. In the meantime, use your trading pad, take lots and lots of notes, write down everything we say, record the levels here. If I give you a new level during the day that I didn't give you at 8 a.m., it's because the market generated it intraday, and you can write it, say, staggered in the margin like that, if that makes sense to you.